Good afternoon, ladies and gentlemen. Welcome to the AMINO Technologies PLC Annual General Meeting. Throughout the presentation, investors will be in listen-only mode. Questions can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet company dashboard, and you'll be notified once these are ready for review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Karen Back, Chair, Donald McGyver, CEO, and Mark Carlisle, CFO. Good afternoon.
Good afternoon, ladies and gentlemen, and welcome to our 2021 AGM. It is now 12 o'clock noon, a quorum is present, and I can declare the meeting open. I am Karen Back, Chairman of AMINO. Before proceeding to the formal resolutions, I would like to thank you for joining us virtually in these unprecedented times. Unfortunately, the other members of the board could not be with us today, as, like yourselves, they are following social distancing rules and respecting the current restrictions on non-essential travel. Nevertheless, I am delighted to welcome Steve Ottigen on the call to the board following his appointment since our last AGM. Steve is an experienced leader of the pay TV industry with global expertise and extensive insight in delivering innovation in software-led solutions in the sector. If any member has any questions in relation to the company or the annual report and accounts, please use the Q&A functionality. We will review these at the end of the meeting when Donald McGyver, our CEO, and Mark Carlisle, our CFO, will also give a short presentation in the form of an overview of the company and the AMINO 2025 strategy. Now to the formal proceedings of this meeting. This meeting has been called for the purpose of passing the resolutions set out in the notice of the meeting. I intend to take the notice of meeting as read. Voting on all resolutions will be by poll. The directors present at the meeting will complete poll cards for their own shares and for any shares in respect of which they have been appointed a proxy. These poll cards will be totaled at the end of the meeting and the results announced and published on our website as soon as possible. In the meantime, I will provide a percentage breakdown of the proxy votes received after introducing each resolution. Resolution 1. I now propose the first resolution as an ordinary resolution, which I remind you was to receive the audited financial accounts of the company for the year ended 30th of November 2020, and the director's report and the auditor's report on those financial statements. Proxies received on resolution were those in favour 100%, those against 0%, those withheld 100 votes withheld. Resolution 2. I now propose the second resolution as an ordinary resolution, which was to receive the remuneration report of the company for the year ended the 30th of November 2020. Proxies received on resolution 2 were those in favour 99.76%, those against 0.24%, those withheld 1,748 votes. Resolution 3. I now propose the third resolution as an ordinary resolution, which was to declare a final dividend of 1.87 pence per ordinary share for the year ended 30th November 2020, payable on the 23rd of April 2021 to holders of ordinary shares on the register of members at close of business on the 6th of April 2021. Proxies received on resolution 3 were those in favour 100%, those against 0%, those withheld 0. Resolution 4. I now propose the fourth resolution as an ordinary resolution, which was to reappoint Donald McGyver, who retires as a director by rotation and being eligible offers himself for reappointment. Proxies received on resolution 4 were those in favour 99.99%, those against 0.01%, those withheld 1,065 votes. Resolution 5, I now propose the fifth resolution as an ordinary resolution, which was to reappoint Mark Carlisle, who retires as a director by rotation and being eligible offers himself for reappointment. Proxies received on Resolution 5 were those in favour, 99.98%, those against, 0.02%, and those withheld, nil. Resolution 6. I now propose the sixth resolution as an ordinary resolution, which was to elect Steve Ottigen, who, having been appointed as a director by the board since the 2020 annual general meeting, retires and offers himself for election. Proxies received on Resolution 6 were those in favour, 99.99%, those against, 0.01%, those withheld, nil. Resolution 7. I now propose the seventh resolution as an ordinary resolution, which was to appoint BDO LLP as the auditors of the company to hold office from conclusion of the meeting to the conclusion of the next meeting at which the financial statements of the company are to be laid. Proxies received on Resolution 7 were those in favour, 99.98%, those against, 0.02%, those withheld, 1,896 votes. Resolution 8. I now propose the eighth resolution as an ordinary resolution, which was to authorise the directors to agree the auditor's remuneration. Proxies received on Resolution 8 were those in favour, 99.99%, those against, 0.01%, those withheld, 4,363 votes. Resolution 9. I now propose the ninth resolution as an ordinary resolution, which gives a general authority to the directors to allot unissued shares and other securities up to an aggregate nominal amount of £253,400, equal to approximately 1/3 of the current issued share capital. This equates to 25.3 million ordinary shares of 1p each, and in addition to allot unissued shares or other securities up to an aggregate nominal amount of £506,800, which equates to 50.6 million ordinary shares of 1p, each in connection with an offer by way of a rights issue. Proxies received on Resolution 9 were those in favour, 99.94%, those against, 0.06%, those withheld, 4,044 votes. Resolution 10. Moving now to the special resolutions. I now propose Resolution 10, which authorises the directors to allot equity securities for cash in connection with offers of securities in favour of existing shareholders on a pre-emptive basis, and where an allotment is made to any person otherwise than on such a pre-emptive basis. This allotment is to be limited to a maximum of 7.6 million ordinary shares, which represents approximately 10% of the company's existing issued share capital. Proxies received on Resolution 10 were those in favour, 99.93%, those against, 0.07%, those withheld, 4,644 votes. Resolution 11. I now propose Resolution 11 as a special resolution, and this resolution authorises the company to make market purchases of its own shares, subject to a maximum limit of 7,602,992 shares, which represents approximately 10% of the issued share capital of the company, subject to minimum and maximum prices for such purchases. Proxies received on Resolution 11 were those in favour, 99.9%, those against, 0.01%, those withheld, 12,460 votes. Resolution 12. I now propose the final resolution, Resolution 12, as a special resolution, and this resolution is to approve an amendment of the Articles of Association of the company in relation to the circumstances in which the company may in future hold general meetings by purely electronic means. Proxies received on Resolution 12 were those in favour, 100%, those against, 0%, those withheld, 9,712 votes. Ladies and gentlemen, that completes the formal business of this AGM, and I would like to thank you all for joining us for the meeting. I declare the formal meeting closed, and we will now proceed with a short presentation by Donald, on the annual results, followed by answers to questions that you have been raised prior to this meeting and on this platform. As noted at the beginning of the meeting, the results of poll voting will now be totaled and announced via RNS and via our website as soon as possible. Over to Donald.
All right. Good afternoon, everybody, and welcome. I'm going to do a very short presentation from our annual results presentation. So first of all, I'd like to say we're very pleased with the results. All of our key metrics were all tracking ahead of the prior year. As you can see, revenues were up. But most pleasing for us that our software and services revenues were up to almost $20 million and continuing to grow. And within that, our ARR continues to be the focus on the business. And again, we saw good growth in the period there. And having ended the year with a strong balance sheet, with a strong net cash position of $9.5 million, having performed well in a challenging year, and having a positive outlook going forward, we reinstated a new dividend policy, which hopefully everybody's familiar with now and just been approved in the AGM. And one of the things along the bottom there, if we look at our strategy and our vision to make it easy for people to connect to the TV and video that they love, any screen, anytime and anywhere, we've got some really good brand names from our customers that show the progress we made in what was a challenging year, but a really good year that we built on some of these opportunities. And our marketplace is changing quite dramatically, and it's how, when and where consumers are watching TV that's driving that change. And what we really focus on is that end consumer. Not our customers, the broadcasters, the pay TV operators and the content owners need to understand that today what the viewer wants is that live TV and video streaming combined, any screen, anywhere and any time. And our value proposition to help them keep ahead of these viewer demands is resonating with them and resonating through the solutions and the products that we provide to the marketplace. And as I said, the change is very much consumer driven. Traditionally, the TV operators and the broadcasters had the power, but today it is the consumer that's driving that change. And we see particularly a growth market that we participate in of streaming has continued to grow quite significantly. The market's expected to double by 2025. And whilst you think of that as representing the familiar names like Netflix, Amazon Prime and Disney, it actually represents a lot of new entrants into the marketplace. Some of them are customers, and it represents a lot of traditional broadcasters and operators bringing content to the market in a new way through these products. But what the consumer wants is that best of both worlds. They want I'll go back. And again. What they want is that best of both worlds, being able to get video on demand and live TV. And there are three things that are really driving that: choice, usability, and convenience. The ability to get to the content you want, to be able to get that in a way that's familiar, that you have a user experience that's acceptable to you, and also to get that conveniently. And one of the challenges, just an interesting stat from the market, is that consumers are spending almost 20% of their time on streaming platforms just trying to find that content on there in a way that they want to find it. And how do we address the market? Well, we address that market through our two major routes to revenue. And just to remind you, it's the operators, the broadcasters, and the content owners that we are delivering to in the marketplace. And we have multi-screen video and Pay TV Plus. Pay TV Plus is about helping traditional broadcasters and operators be able to bring some of these new TV services. And if you look at it in the UK, those of you who are familiar with this market, we've seen that happen with the likes of Sky, who 2 years ago had to accept that rather than provide all of the content through their own channels, through their own means, they had to welcome people like Netflix and Disney and Amazon Prime onto the platforms. And that's what we do for our traditional and new operator and broadcaster players to help them bring these streaming services to market in a way that fits with the demands of the end consumer. And then we're also helping some of our other customers with their what we call multi-screen, the ability to get any content onto any device, anytime. And we do that through our solutions our software solutions for new customers coming to market, people like Broadway HD, people like Topic and Pureflix, but also more traditional operators, people like the NPO, the Dutch National Broadcaster, who we deliver their OTT services, effectively the equivalent of the BBC iPlayer for the Netherlands. We deliver that for those customers in our marketplace. And as you can see, we have been through a bit of a transition, and that we've seen us pivot through that and move on to a new area. So over the last 4 years, whilst we saw the sort of revenues from our sort of high volume devices focus more on the areas where we can add a lot more value, we've continually seen our software growth, and particularly pleased with that this year going forward. And we'll continue to grow our software and our recurring revenue into the future. One of the things we did announce was with our results is our 2025 strategy, and our goal is to triple the revenues over the next 4 to 5 years, generating the majority of that coming from software, and within that software, a high proportion of that being recurring in nature. And that's really about us focusing our solutions, our software, and the services we deliver, but actually focusing in areas that add value to our customers. So organically investing in our data platform, data becoming a much more important thing for our customers and for ourselves, to be able to monetize that and help our customers provide more value-added solutions, and also through our consumer end experience, the things I talked about earlier: choice, convenience, and usability. But obviously, to underpin some of that growth, it will require some M&A, and we do see that the opportunity has actually improved for us to do that. We do see valuations becoming a little bit more reasonable, and we aim to fill out parts of our ecosystem where we can actually consolidate our position, where we can gain some market share, and where we can fill some of the gaps and that we've got in our portfolio. So we will hopefully be able to do that in a way that meets both the needs of our customers and our shareholders. And one of the topics that's become very familiar to everybody is obviously ESG. And whilst we know it's important to our shareholders, we have put it at the heart of our company, it's also really important to our customers and to our employees. Last year we did our engagement survey with our employees, and we got a resounding feedback from over 93% that this was important or very important to them. So we're in the process of putting in place real targets and real action plans that address those sort of desires of our shareholders, of our customers, and of our employees. And we've put at the heart of our ESG manifesto the Japanese concept of ikigai. Ikigai means the reason for being. I won't go into too much, but it's about combining the employees' passion, their mission, their profession, and their vocation to make coming to work for the AMINO Group a positive experience for everybody, including our communities and our environment. We have based our framework around the United Nations Sustainable Development Goals and all the underlying targets, and you'll see that we've chosen 6 of those development goals to which we think we can make the most contribution, and you will hear more from us around that as we go forward. So really, in summary, I think hopefully you'll see that our software-led strategy really is delivering results, and that focus on recurring revenue that matters to our customers, to be stickier with our customers, and matters to our business, is still continuing to grow and will continue to be a focus. The 2025 strategy, allowing us to capitalize on this sort of convergence between streaming services and pay TV is underway, and we'll execute well on that. And we've seen the shifts in viewing, be a particular opportunity, and COVID has actually just accelerated that for us. So very positive about the future and the future opportunity ahead of us. And that was all from me.
Fantastic. Thank you, Karen, Donald. Thank you, Mark. Ladies and gentlemen, please submit your questions using the Q&A tab situated on the right-hand corner of your screen. But I'd also like to remind you that recording this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order the company can better understand your views and expectations. Karen, Donald, Mark, we have received one pre-submitted question ahead of today's AGM, and you can see the Q&A coming through now. Perhaps I could just address this one to you, Donald, if I may. It reads, Apple's been granted a patent for a generic streaming media device configured as a set-top box. Is this a serious competitive threat?
No, it's certainly not a competitive threat. I think for us, it just confirms that set-top boxes or IP devices, particularly the kind of IP devices that have always been core to our business, are really an important part of the future of TV and video, and being able to put that in the heart of the home is really important. And still, one of the best ways to do that is through a small cloud-based IP device to be able to deliver all the benefits of both streaming services and traditional pay TV. So I think it's just a validation that, you know, what we do and the software solutions we've got continue to be at the heart of that, combined with, you know, some element of devices going forward.
That's fantastic. Thank you very much indeed. If I could just redirect you to the Q&A tab, we've seen some questions come through there. If you could just perhaps read out the question where appropriate to do so and give your response, that would be fantastic. Thank you.
Okay, we've got one here from Jonathan. Could you comment on any impacts reported chip shortages are and will have on your business? Yeah, chip shortages, component shortages, and component lead times do have an impact on the business. I think for us, it's having less of an impact because we have anticipated some of this. We've actually been dealing with these situations over a number of months, and we will continue to deal with it. So there's always issues around the components and the lead times, etc. And we've seen lead times go up quite significantly. But I'm pleased to say that we kind of anticipated this early last year and managed to put in place some inventory levels that mean that we're confident that we can supply the needs of our customers going forward. It actually has a slightly positive benefit in some ways in terms around visibility, because the understanding that lead times are becoming longer, the fact that people experienced, the challenges. I think you're all familiar. There was a period of 2 months last year where there was no production coming out of China, for example, back in March and April last year. It made customers realise that we need better visibility, and we need to work closer together. So we have seen certainly some of our customers give firm order commitments now into next year, which is kind of different to how we've had it in the past. And again, we will have challenges. I do expect that component prices will also have challenges, but I'm also confident that these will be able to shared or passed on to customers. And I think customers understand that and realise that having security of supply is now as important as just the price that you pay for these products. What else have we got?
We've got one question from Andrew. Andrew says, with lockdowns and consumers spending a lot of time streaming, presumably some companies postponed major software upgrades during this period. Has there been any sign that new customer software upgrades are accelerating? I think that's quite an interesting and well-informed question, Andrew. What we saw last year when I looked at our budgets was that actually when we looked at the software upgrades that were being done, it was mostly by our existing customers increasing volumes. So we saw a lot of increasing volumes last year from existing customers. And the 24i business did sign and deliver 6 new customers even in a COVID period, which was a fantastic result. But actually that was a little bit below our budgets. And what we're seeing now is that with the convergence of streaming and pay TV and more consumers watching TV, there are more budgets around for people to do upgrades, and people are now getting used to the COVID. So yes, we are seeing a return to the levels of growth that we anticipated last year that was slightly hampered by customers focusing on the knitting, as it were, rather than upgrading. That's correct.
Thank you, Mark. That concludes the questions that we've had submitted. We will just keep that opportunity open for investors if there are any further questions to come through. And of course, the company can review all questions submitted by investors today, and we'll publish those back on the Investor Meet Company platform. So perhaps we'll just keep that open for a couple of seconds longer to see if we get anything further through. And then perhaps I could hand back to you, Karen, to give a little wrap up before we redirect investors for some feedback.
Yeah, sure. Watching the Q&A board. Okay, I will wrap up. The main message I want to leave you with is a thank you for our team and all the people that have supported 24i and AMINO during this last year. Our team have absolutely focused on quality delivery for our customers, and that's always true, but the last 15 months has been tough. Management, their focus has been on the well-being of every single employee in the team, and that has included recording some amazingly funny music videos, to doing online fitness classes, to driving chairs around town to deliver to people's homes so they can work safely, and sometimes just listening and being their friend. I am hugely proud of what the team has done in the last 15 months and of every single member across the business, whatever country they're in. In addition, we have delivered for investors pre-COVID expectations, and for customers, we've delivered projects, new customers, existing customers, end-to-end for Uphone, scalability for Broadway, data virtually from devices in the home. Looking forward, there remain challenges, whether it's personally working from home and having kids at home to deal with, whether it's logistics or political, but actually I look at this business and the year that we've just had has made us stronger. We continue to grow our software and services, we continue to innovate, and we're very excited about delivering our 2025 strategy. This time last year, our AGM was in a car park. My husband was the shareholder, I was the director. Now we're online. Next year, I really, really hope that we can meet physically and have tea and biscuits. We can thank you personally as investors for your support. We can thank our team, our customers, our partners, our suppliers. And in the meantime, we wish you a very healthy and happy 2021. Thank you very much.
Thank you very much. Thank you, Karen. Thank you, Donald. Thank you, Mark, for updating investors today. Could I please ask investors not to close the session, as you'll be now automatically redirected for the opportunity to provide your feedback. If you've accessed the meeting from our website, the feedback page will appear in front of you. If you've accessed the meeting via the link sent to you in the email, you'll simply be asked to log back in to submit your feedback. It takes just a couple of seconds. It'd be greatly appreciated by the AMINO Technologies team. On behalf of the management team of AMINO Technologies PLC, we'd like to thank you for attending today's AGM presentation. That concludes today's session. Thank you and good afternoon.